Did you know that practices lose up to $30,000 per year due to poor billing habits? Hello, my name is Linda Burton, your Wealthy Habits trainer, and today I'm going to teach you how to manage the financial success of your practice simply by understanding the Accounts Receivable Aging Report. Accounts receivable is money owed to you for services rendered. The aging piece is how long it takes that money to end up in your pocket. I want you to think about your patients having two sets of numbers. Clinical numbers like lab values and things like that, and then non-clinical numbers. That's the financial piece. You already know how to manage their clinical numbers, and today I'm going to teach you how to manage their non-clinical numbers. This module is probably the most tedious, but hang in there with me because this is the income heartbeat of your practice. You need to know this stuff. It's your money. It's your livelihood. It's your financial success. There are different names for this report. The AR report, the Outstanding Accounts Receivable Report, the Receivables Report, the Aging Report, the Accounts Receivable Aging Report. They all have the same meaning. Your banker's going to ask for this report. Your CPA is going to ask for this report. Know the terms, know what the report means, and let them know that not only can you save lives, but you can also run a successful practice. Your receivables start accruing when you see your first patient. It's always in motion. It doesn't stop until you stop. This report is a tool to help you manage the money owed to you. Now we're going to approach this in 3 steps. First, I'll teach you the basic layout of aging reports. Second, I will teach you how to implement procedures to capture your revenue in 60 days. And third, I will teach you how to clean up past due accounts. So let's start with step 1, understanding the layout of the AR report. Here you'll see an example of a total accounts receivable aging. This is all money owed to you from insurance companies and from patients. The first column is descriptive. Here you'll see a list of patient names. Across the top, you'll see columns labeled in 30-day increments. The second column is your current month charges. Next is money not collected between 31 and 60 days. Next, money not collected between 61 and 90 days. Next, money not collected after 91 to 120 days. And finally, money not collected after 120 days. That's 4 months or more since you provided the service. You see how quickly this can get out of hand. This section is a summary of the first 5 columns: what the patient owes, what insurance owes, and the total owed for the patient. In medicine, accounts age twice, once while waiting for insurance to pay, and again while waiting for patients to pay their portion after insurance is paid. Okay, this gives you the basic layout of the AR report. Now we're going to look at the very last page, and this is going to give you a snapshot of where your practice stands. You will see the totals for each column and the accompanying percentage. Now, if your software doesn't figure the percentage, it can easily be done by dividing each column total by the AR total. What we're looking for here is as your days increase in the accounts receivable, you want the percentage to decrease. This means the money's getting into your pocket faster. Now, this AR looks pretty good because this is a Wealthy Habits AR. But what if your AR looks like this? You can see that the percentages are increasing rather than decreasing. And look at this 120-day column. It's almost 25%. Yikes! Let's compare the two. With the good AR, we see percentages decreasing. With the bad AR, the percentages are increasing. This means money owed is not being collected in a timely manner. But quite frankly, this is what I see when I'm asked to consult with a practice in trouble. And sometimes it's worse than this. I bet you're curious what your AR looks like, huh? Well, the aging report is a standard report in all practice management systems. Try to learn how to access and print this report yourself, especially if you suspect a problem in the office. The question is, how do you get and maintain a good AR, a wealthy habits AR? You do this by implementing step 2, which is establishing a 60-day call cycle. So let's go back and look at our total AR report, and we're going to focus on the 60-day column. We're looking for unpaid insurance claims, but there's got to be an easier way to do this than going patient by patient. What you're going to do is you're going to generate an insurance due aging report. Be sure to print a summary because a detailed report would be overwhelming. You can see here that in the first column, we have a list of insurance company names rather than patient names. You have the 30-day incremental columns across the top, and the last column shows the total due to you from that insurance company for all of your patients. With the summary report, you can quickly see problem areas. Highlight large balances in the 60-day column, and we always want to work large to small balances. Now, for the purposes of this training, I'm going to use Medicare because that's one we're all familiar with. To drill down and see what patients make up this amount, you will need a detailed insurance due report. You want to print only one insurance company at a time, the one you're working on. If you printed a detailed report for the entire practice, it would be overwhelming. And remember that this report is always in motion. It changes every time payments are posted and charges are added. You need to work methodically, large to small balances, one insurance company at a time until this is resolved. All of these claims need to be called on. Do not let your staff tell you that they will rebill them. Rebill means to send the claim again, whether electronic or by paper. If the insurance company didn't process it the first time, they're not going to process it the second time. In addition, you're pushing a 90 to 120-day deadline for filing claims. With step 2, you've started the process of working unpaid claims earlier in the revenue cycle by implementing the 60-day call policy. This procedure will be repeated monthly in order to maintain a good AR, because each month you will have a new set of unpaid claims. Step 3 is cleanup. With a bad AR, the likelihood is that your practice is in trouble and possibly having a cash flow crunch. The cleanup step should be a one-time process. If you follow step 2 every month, then you shouldn't need to clean up again. Looking at the same insurance due summary that we printed earlier, shift your attention to the 90 and 120-day columns. You will follow the same process, working large balances to small balances, printing a detailed report for each insurance company. These claims are urgent and in danger of being past the filing deadline. Missing the deadline means you will never be paid for the services you provided. Now, I just want to quickly clarify that in step 2, we're establishing a monthly procedure. New practices, you need to start it from day 1. Established practices, implement as soon as possible. Step 3 is cleanup, and this can be a daunting task. You may even need to bring in outside help and staff up as a way to get faster results. We'll talk more about this, the pros and cons of outsourcing, in the staffing module. Okay, you have completed your first round of aging with the insurance companies. Take a deep breath and let's keep moving forward and look at the second round of aging, which is patient due balances. We're going to apply the same methodology here, but rather than looking at insurance due, we're going to look at patient due. Print a summary aging of patient due balances. You'll want to age this by the date balance was turned to patient responsibility and not from the date of service. We can't hold the patient responsible for a balance during the time we're waiting for the insurance to pay. You're going to establish the same 60-day call cycle with patient balances, but this process works in conjunction with your patient statements. And I'm going to teach you that in the next module. So in the meantime, let's go straight to cleanup mode and look at all the patients in the 90 and 120-day columns. Start with large balances and work down to small balances. Get a status on all of these accounts. Eventually, all the balances need to be reviewed. These need to be called on, turned to collections, written off, whatever action needs to be taken to get your AR cleaned up. The goal is to have a meaningful report, something you can use to manage the financial success of your practice. That's why we're all here. Now, even though we would like to have 0% in the 90 and 120-day columns, it's highly unlikely. We're looking for small percentages. Once you are on track with your 60-day call cycle and your 90 and 120-day columns are cleaned up, anything that appears in these two columns should have an explanation. And here's an example of what I mean. When I was putting these slides together, this one immediately popped out at me. And since this is one of my billing clients and we follow every single step I'm teaching you here, there better be a good explanation. I went to this patient's account, and sure enough, there were 3 pages of notes where my staff had been working with the insurance company to get this paid. They'd asked for medical records, and you know the drill. Here's an example of the notes that my staff makes, but make it your policy that every staffer that touches a patient account makes a note. That way, no matter who looks at the account, including you, there will be a chronological history of what has happened. A clean AR means you're getting paid for your services, and that is what I call wealthy habits. Let's do a review. You're going to print a total AR and get a snapshot of your practice today. Save your original report and use that as a baseline to chart progress. As soon as possible, implement a 60-day call plan for unpaid insurance claims, and that will be repeated monthly. For cleanup, you're going to work the 90 and 120-day columns for unpaid insurance claims, working methodically large to small balances. And set a timeline to achieve the above because the clock is ticking. And for patient balances, you're going to clean up the 90 and 120-day columns. Most importantly, be involved in all aspects of your practice. Thank you for joining me today. I'm Linda Burton, your Wealthy Habits trainer, and I'll see you in the next module.